for the final week of my presentations. Ibrahim and I were just discussing that we're going to have another session next week just for general discussion. I won't be making a presentation, but we will just open up for general discussion of everything we've talked about over the last, 7 weeks. So I wanted to finish up the lecture from last week, just offering you some of my very specific ideas on monetary reform. There's been so many different options put on the table, and people were working on those options from a legislative standpoint. But I've tried to think about the best, from my perspective, what the best reforms might be. And so tonight I want to give you, some thoughts on that particular challenge. One of my inspirations on monetary theory has always been Adam Smith, and in The Wealth of Nations, as you may recall me telling you about, he wrote about the system of receipt money that was issued by the Bank of Amsterdam during the early 1700s. So my question has always been in my mind: could this type of deposit bank issuing receipt money provide stability to the modern monetary system? And there's really no serious discussion today about going to this kind of a deposit bank system with full reserves behind money. And there are good reasons for not wanting to go there. But what I want to give you some insight into is a case for establishing an international system of deposit banks that could be created with coinage that would have a standard weight and measure of gold and or silver. This coinage would serve as a base monetary unit that would be consistent across all the participating countries. So what would this system look like, and how would it be created? Again, this is an idea of giving the money in circulation, whether it's digital or paper money, a stable purchasing power. In other words, there would be something backing the currency that was tangible, that had a standard component to it. And in my view, that could go a long way to improving the monetary system. So what would it look like? Well, history tells us, of course, that people most trust as a storehouse of value gold and silver. People were still buying silver all the time. Most silver and gold coins, however, these days are acquired as collectibles, and they're acquired as a hedge against inflation. You may have some in your own, investment portfolios. Many people do that. And there are strong reasons for this. Of course, the metals are nearly indestructible. So the demand is universally strong, and the supply is relatively stable these days. I mean, there's still gold and silver being mined, but the amount of gold and silver that has been mined over the last 500 years provides the stock of this precious metal that's out there. So there are environmental issues to deal with. Mining of gold and silver is not environmentally friendly. It costs a lot of money to do this. I was watching a documentary the other day about how much gold comes out of this one, big mine, and it takes tons and tons and tons of rock crushed to come up with a few ounces of gold. So it's an enormous cost. And then, of course, once you have the gold and you refine it, then you have to send it to a mint, and the coins have to be minted. And then what happens to them? They end up being put into some vault that has to be protected from theft by elaborate security systems. So it does seem kind of weird, and certainly not today. It seems very environmentally foolish to go through that process of refining the ores into precious metals and then minting them just to put them in a vault for storage that has to be secure. So what's an alternative? Well, receipt money could be backed by other tangible goods. There's been a lot of discussion about this over the decades. Some basket of commodities, um, a basket of precious metals, but something tangible. Well, an economist I know gave me this idea some years ago, and he actually made a presentation to the Russian government when it was going through the post-Soviet years, and Boris Yeltsin was the prime minister or president of Russia. He spoke to some economists, and he tried to sell them on the virtue of moving to a brick standard. Instead of precious metals, maybe we could back currency with construction bricks. And, you know, I want you to think about that for just a minute. It sounds a little bizarre on the surface. However, construction bricks have nearly all the advantages of precious metals, none of the disadvantages. They're easily produced with minimal environmental cost. They do not need to be stored in expensive facilities under armed guard. They last for hundreds of years, and there's a constant and universal demand for them in the construction of all manner of buildings all around the world. So there's a possibility that construction bricks could, in fact, serve as the backing for currency. That's one option that I would put on the table if I was sitting at a conference on monetary reform. Now, many countries have a long history of mining gold and silver coins already. To collectors of rare coins, they often command a price far in excess of the current market value of the precious metal out of which they're minted. So governments, in effect, sell money today at a profit in order to raise legal tender to pay for public goods and services. Let me say that again. Governments, in effect, sell money at a profit in order to raise legal tender. In the United States, that's Federal Reserve notes or the electronic equivalent to pay for public goods and services. So this collector's market for rare and limited press coinage would certainly continue to exist. A brick standard wouldn't replace it, but it would establish an exchange value between those collectible coins and the currency that was backed by bricks. So just to give you some idea of what the volume of precious metals there is in the world, here's a chart that shows the top 10 countries with the highest gold reserves. The United States has 8,000 tons of gold. Today, the most productive mines are in Peru, Australia, and Poland. And they produce the largest annual additions to the quantity of silver mined, followed by Chile, China, Mexico, the United States, Bolivia, and Russia. So there's still quite a few countries that have a supply of precious metals in the ground. Is it a good idea to encourage them to continue mining that? Well, a brick standard would certainly minimize the need to continue to mine the precious metals in all these countries, unless the gold and silver was needed for some industrial use or, you know, for jewelry and that kind of luxury good. Now, what I'm proposing is that there would be a treaty signed that basically representatives from the countries that either hold existing reserves or control in-ground reserves would come together and negotiate and sign a treaty agreeing to monetize some portion of their holdings of gold or silver. and they would mint the coinage according to universal standards of metallic content. So each country would mint their own coins, but they would all have the same metallic content. They would just have different images on the outsides of the coins based on the country. The coins would be held by publicly owned deposit banks as full backing for a new form of receipt currency or its digital equivalent. Thus, the value of the receipt currency would then be uniform throughout the world. Okay, so there wouldn't be a million or 1,000 different coins in circulation. These coins would be held on deposit, and the governments would then have that amount of money, receipt money or digital money, to then spend into the global economy. So that particular money could serve as a basis for settling international trade accounts. And then other countries that don't have gold and silver at all would go on to the BRIC standard. And so you'd have basically these two systems working together to provide the international currency system. Holders of any form of what we now call fiat currency that's now circulating, they could exchange these currency balances at whatever exchange rate the market determines, subject to agreed upon levels of expansion in the supply of new coinage each year, sufficient to meet the need for credit in the global economy. So we're always going to, if we have an expanding economy with expanding demand, we're going to need an increase in the supply of new coinage and in the supply of the currency that's backed by the BRIC standard. We do that now. We expand the money supply, but we expand it out of thin air. And the risk of doing that is inflation or even hyperinflation, in my view. And right now, one of the problems I see is that we don't even, the government statistics, economists do not really accurately and truthfully describe the rate of inflation. Just for one example, land prices are increasing almost everywhere across the world. And yet land prices are exempt from the calculation for rates of inflation, which seems to me to be a extremely dishonest and misleading way to calculate the rate of inflation. So if land prices are increasing 10% a year, as they have been now for some years, the cost of living is unbelievably higher than it was 10 years ago in terms of the cost of acquiring either a residential property or a commercial property because of the land cost component. What seems to mask that is because interest rates are so low, people can borrow more and more. So if you measure the cost of mortgage debt on a monthly basis, it seems like there's no real inflation because your mortgage payments today, borrowing $400,000, are less than the mortgage payments you would make 10 years ago on $250,000 or maybe $300,000. So it's a illusory view of the cost of housing and cost of the residential property because of how we calculate inflation. If we have a recession coming up, the analysis that I'm familiar with says 2026 is the most likely year for a major recessionary downturn. And you have millions of people who've purchased a property at the top of the market, and they're $400 or $450 or $500,000 in debt. What happens to them when they become unemployed? It's not going to be a very pretty picture for the economy. I don't expect any substantial monetary reform issues to occur anytime soon, and it may take a collapse of the existing system for anything to happen, unfortunately. Well, if we did get this system that I'm proposing, private individuals, business entities, and other organizations would become members of the deposit banks, and they would basically purchase gold and silver in the open market that would be minted into coinage and then deposited with one or more deposit banks based on their commercial interests and needs. So you have an international company, they would basically deposit their gold or silver to be minted in whatever countries they're doing business with. So many of them might do it with China or Japan or Germany, as well as the United States or other countries. Members would then be able to buy and sell goods and services with other members with automatic debits and credits recorded. What this means from business is bad debt expenses would essentially disappear, because it puts the whole economy on almost a debit card type structure. So what other changes might come about? Well, existing commercial savings and investment banks would become a member in the system in the same way, thereby establishing an account balance against which they can make loans to third parties at interest based on risk and the opportunity costs associated with the temporary transfer of purchasing power. So doesn't replace commercial banks or credit units or trust companies or anything. And they're still going to, at least for some period of time, they're going to use the legal tender that exists now. In the United States, that would be Federal Reserve notes. But gradually, there would be a competing system. The banks would all become members in that system, acquiring their gold and silver, having it minted, having it deposited, and over time, would have a system where the existing legal tender that's backed by nothing would be depreciated out of existence. Now, this is just a pretty rough presentation of how such a system of deposit banks that issue receipt money might be introduced today. A version of the monetary law put forward by Thomas Gresham is anticipated in reverse. If you remember, I talked about Gresham's law. Gresham basically argued that bad money would chase out good. People would use depreciated money for their commerce so long as it was accepted at the face value of new money. So under this system, fully backed receipt money and bank balances would drive out fiat currency and fiat currency bank balances over some period of time. The process would need to be well managed during a period of transition and retirement of circulating currencies. And so I think something like a new Bretton Woods conference would be needed to work out the details before there would be an international treaty that would be discussed and signed. And so there you have it. You have my personal proposal for what we ought to think about doing. Any reactions or thoughts? I know it's a lot to put on you, right away. But maybe it's something to think about. Anybody have any initial comments?
Hi, Ed. Joe Polito here.
Hello, Joe.
Couple things. One, the notion of inflation. I think in terms of these large-scale assets like land, like stocks, like bonds, as the interest rates go down, they go up, right? Because the discount rate is falling.
Correct.
And conversely, if interest rates ever normalize, then they're going to do the reverse. And I have seen in Canada, at least Statistics Canada has kind of justified why it leaves certain things out of the inflation. And they look at it more from a rental point of view, an equivalent of rent and so forth. And I'm not disputing what you say. It's just, I don't think there's kind of a hidden inflation, and the valuation of those assets can be very deceiving because of the interest rate discount rate. Second thing is I'm much, I'm totally convinced now of the importance of various measures to take away the economic rent.
What do you mean by take away?
Well, the tax away, sorry, the land value tax, obviously, the land value income taxes proposed by Rick.
Yeah, I think I want to make a clarifying comment, because it may be that others are thinking about this in a different way. And that when you say take away the economic rent is a great thing. The question is, where does the economic rent go? How is it distributed in society? And this is what Henry George's analysis showed, that there's nothing bad about economic rent so long as it is treated as societal wealth, and then it can be used to pay for public goods and services.
Right, the unearned income, what I should have said.
Okay.
But the point is that those two taxes. Here in Canada, one of the proposals that was floated by the Bank of Montreal's economist was that the capital gains on non-primary residential property should be not be discounted so much. It shouldn't get the preferred rate. More of the capital gain should be included in the process. And in all of those cases, all of those taxes, you're discouraging the investor from looking to property as an investment strategy, right? And that would reduce the price of land, or at least stabilize it, depending on how you did it, how incremental it was. And you could remove that problem, that inflationary problem, from the equation.
You're absolutely right. If you deal with the land issue and you prevent the capitalization of, not to get too technical, net imputed rent into a selling price for land, then obviously the result is going to be dramatically reducing the cost of property assets, and that's going to dramatically reduce any kind of inflationary pull on prices, because remove the land cost component, and now you're only paying for labor and capital as you produce goods and services, and they travel through the economy. So it would have remarkably positive outcomes. However, the problem is the transition, because in not just Canada, but the United States and in many other countries today, the primary source of net worth for households is the equity they have in their residential property. So the question has been, as you suggest, is being discussed in Canada, whether or not to allow the owners of residential land to capture and keep their unearned income or unearned gains from land ownership, and try to change the system at the level of commercial property. But my own view is that I would rather see the government fully tax economic rent, and then give every household a check for some amount, I don't know, whatever it is, to help with retirement income, because I think that's really the main reason why people rely on the equity they have in their residential property. It's to supplement the retirement income. In the United States, it's sell your property in a high land price state and move to an area where the land prices are much lower, and pocket the difference to live off of. I don't know if I've been
No,
clear or, but
oh yeah, no, it makes
I
perfect
think
sense.
those are the issues that politically are, in play.
It makes perfect sense. In Canada, there was just a report issued in the newspaper that 1 in 5 Canadians have more than one household. And a significant percentage of that group has more than two. Obviously, it is an investment strategy for them. If you do as you suggest, or some kind of, some incremental achievement of that, then that would be discouraging that form of investment. It would go to more productive places. It would bring the price of land down, or at very least stabilize it, and make housing more affordable. And the cheaper things are, the more we can produce and consume. And it would address that, again, that inflation problem that you're talking about.
Yeah. So which reform is the most important? The tax reform or the monetary reform? Do they work in tandem with one another, or do they work against one another? This is the harmonizing these reforms is really a great challenge. So I don't pretend to have all those answers, but I would love to see monetary and tax experts included in a series of conferences that began to deal with these issues and deal with them from the perspective of what makes the most sense internationally to adopt. And I see Marty Levin and Ibrahima have their hands up.
Hi, Ed.
Marty, hello.
I missed one or two of your last lectures, but one of the presentations I was at, you were addressing the different economic boom and bust cycles of the monetary and banking system. I think you highlighted particularly the ones in the 70s and the late 80s or early 90s, and then of course what we all experienced in 2007, 2008. So clearly, coming up with some kind of a better system would be advantageous. But I'm trying to wrap my head around this brick economy, and I can't imagine having to take bricks to buy bread or something. And what do you do? Cut off a little?
Oh no, no, well, no. The bricks stay where they are. I mean,
I see.
It's not like you need bricks. The money would be issued as a quantity of bricks. Whatever makes sense from a unit standpoint. An individual brick, if I go to Home Depot to buy a one brick, it's probably about $1, maybe $1.25 or something like that. So there's a rough equivalent already. If $1 Federal Reserve note in the United States buys one construction brick, so you have an exchange value adjustment all around the world, because roughly speaking, the existing currencies are going to have that exchange value as well. And so by saying that if you're in China, one, whatever Chinese unit would get you one construction brick, and those construction bricks have the same quality, then you're basically stabilizing prices that are going to be tied to how uniform, how stable the exchange rate of a construction brick is to other commodities. And as I said, the reason, and this wasn't my idea, this is something, as I said, that an economist I know came up with, and I thought, that's really remarkable. And, I tried to think about it, how it could be implemented. I don't know if he's written anything additional on this subject. I can tell you that the Russians he presented it to, kind of looked at him like he was not quite right, but when he told me about it, I gave it a lot more thought, and I think it has merit as a system that would bring us back to the original Bank of Amsterdam design, issuing receipt money that was backed by a tangible good without all of the complexity of producing gold and silver coins. Although again, we have enough gold and silver out there and that it's possible to have a dual currency system, as I mentioned.
Yeah, well, you've got a problem with volume. If you had to pay $10 million in bricks, that'd be a lot of bricks and it would take up a lot of space. Where if you had the bricks made out of gold and gold was selling at $2,000 an ounce, which isn't too far from where it is now, a 50-ounce brick would be, $100,000. So
Yeah.
that would be a
Well,
lot easier
so
to manage. So
if you have 1,000 brick note, that would get you 1,000 bricks.
right.
Doesn't mean that you have to use bricks. It just means that there will be 1,000 bricks out there. If you go somewhere, with that 1,000 brick note, you can get 1,000 bricks. And there are contractors and developers who need bricks all the time. And so I don't pretend to have it all worked out.
No, I
Marty,
understand, but I guess one of the other questions that comes up, I know with the current banking system, at least here in the US, the reserve ratio is under 10%. Is that right? You can lend 10 times as much money as
Yeah, but the
actually
reserves, here
maintain.
again, it's what is reserves and
Right.
what is in reserves is government debt,
Mhm.
so.
Okay. well,
Ibrahim,
let's-
did I give you a decent enough response?
Thank you.
Can I go ahead?
Yes, please go ahead.
Go
Yeah,
ahead,
so,
Ibrahim.
it's just a very short question. I just wanted you to elaborate a little bit on what you call the BRIC standard. So how would that work practically? Because
Well,
it's
that's what
fairly-
I've been trying to explain,
it's fairly
in
easy to
response.
it's fairly easy to produce bricks. So if bricks were to back money, that also means that we are not very far from the fiat system where we are, because then the banks would be just, producing as much bricks as they need if they wanted to expand the money supply. So
Okay.
I wonder how would that work?
Yeah. Again, the idea of having something tangible backing currency is simply establish a standard unit of value. And because precious metals are much more limited in supply, and they have such a heavy cost first of producing them and then storing them, something else that's more practical ought to be considered. There may be other options besides construction bricks, but construction bricks, as I say, can be produced. It's not like the deposit. You don't need a deposit bank to hold construction bricks. You just have you could have contracts with the companies that produce the construction bricks, that they would produce them on order for anybody who wants them. And then the deposit bank issues its currency in that standard. So as I say, it could be a 1 brick unit purchases 1 brick. And so there's no limit on the amount of currency that could be issued, because you can produce bricks into infinity and an unlimited amount. Now, there are technical issues here with the quantity. You don't need to have the exact number of bricks physically produced to equal the brick currency in circulation, because you can always produce more bricks so easily. How much in actual tangible bricks you'd need, I don't know, but my point is that you could have it. You don't need. You have the capacity to produce them, and so there's never a problem with someone who wants to redeem their brick currency in bricks.
Okay, makes sense to me.
Anyone else?
If you could share that reference, that would be really nice. The Russian economist that you mentioned.
Unless I had permission from the person who came up with the scheme,
Okay.
I'll ask him.
Okay.
Ask him if he doesn't mind. But sort of promised I would keep this confidential in terms of
Okay.
the source of the idea.
No problem. It looks like Guy has a question.
Guy, okay, sure.
Hello. The question of BRICS, can we put it in the form of a parity?
Of parity?
Yeah.
Well, markets determine parity. And so if every country adopts a BRIC standard, there's an automatic parity. It's going to cost the same, it's the same amount of effort to produce a brick in China or Zimbabwe, or Canada or anywhere. So there's an automatic parity that's established.
I ask you the question because, we were talking, you were talking with Ibrahim about the BRICS. So I say, based on the last, conference we have last Wednesday, I said, why we cannot have just a parity? So if we set up a parity with the BRICS, it clear the problem.
Well, I listened in on that discussion. Others in this meeting have not. So I don't want to get into a discussion of the whole idea, but that's a whole different concept. And I'll tell you, I really have to think more deeply about it. But for others, basically, the one argument is that it's possible to establish a basis for costs and control those costs by establishing a system of relationship costs, and then use government to enforce those relationship costs on the economy. And I have to think more deeply personally about whether or not it is a practical, it may have worked during wartime or extraordinary circumstances. I don't really know whether it would work as a fundamental reform. So that's about all I can say right now. Joe, did you have another comment you wanted to make?
Yes. To get back to your point about money reform and economic rent, unearned income reform, working together. One of the things I've realized in reading some of your stuff and Rick Demir's stuff is that the monetary reform will be more equitable. It will, I think, generate more wealth. It'll keep us more at full employment and reduce all the pathologies of inequity. And all those are costs to us. But if we don't also tax away unearned income, the economic royalists, as Roosevelt called them, will extract a lot of that wealth. For example, housing prices and land prices would go up even more. And so people with that extra income and better income would be devoting more and more income to the purchase of homes. That'd be the best example. So I think they go hand in hand. I think you have to have the taxing way of unearned income in order to make sure that the productivity and wealth creation of monetary reform is spread out more evenly.
Yeah. Let me just make one comment about that. I certainly don't disagree with you. The problem we have, at least in the United States and in many other countries, is that economic rent is captured at different levels of government. And in the United States, most of the economic rent associated with land in communities is captured by several different levels of government. In the United States, you live in one location, you probably pay 3 or 4 property tax bills. You pay one to your town or your borough, to your township, to your county, and your school district. So getting all of those government entities to use the same system in the United States has proven to be extremely difficult. And then too easy to overturn even when the system is changed for the better. That happened in the case of Pittsburgh, Pennsylvania, which adopted a two-rate property tax back in the early 1900s. And because the county rarely did a reassessment, when it finally did a reassessment, it caused a public outrage. People who had been accustomed to having their property appraised at far below its full market value, all of a sudden saw their assessments increase, and they didn't get their tax bill yet because with the assessment increases, the rate should go down. But there was an outcry, and so Pittsburgh, its public officials abandoned the two-rate property tax, and so they went back to the conventional property tax. And this is one of the shortcomings. Now, if a government taxed all property, real estate at the national level and did good assessments on a regular basis, that might work. But so far, we haven't seen any countries that are willing to do that in any systematic way. I guess the closest we come is Singapore, and then Hong Kong, because Hong Kong still has most of the land held, the title to the land held by the colony and leased out to private owners under a ground lease arrangement, although that system isn't perfect either. So I think we can't wait for the solution to the capture of unearned income via taxation. We need to do something to stabilize the monetary system now. And one of these ideas will hopefully float to the surface with, again, the need to really, in my view, the great risk of what we're doing now is a potential for hyperinflation. Okay, well, I appreciate those comments. I hope I've given you something to think about. I continue to think about these reform ideas and weigh in the balance, what's good about the proposal that I've put on the table. And I'm always willing to discuss, the pros and cons with others or other people who have studied monetary reform even more deeply than I have. And so, all I'm hopeful of is stimulating some discussion and thought on the issue. But now the last lecture tonight, hopefully we'll finish up by 8 o'clock, is what I've learned about studying the phenomenon of cryptocurrencies. So this is really the most recent innovation designed to liberate the supply of money from the control of central banks and from the expansion of money in circulation by what the central bankers have creatively called quantitative easing. And so the development of cryptocurrencies, the first issuance of which was termed Bitcoin, is with us. And the question that many observers have is whether this new innovation represents a legitimate medium of exchange or is merely one more Ponzi scheme to enrich speculators. And I will try to provide some information about what the pros and cons are of the cryptocurrencies operating today. I did share my screen, right? So you can see David Chom on the screen.
Yes.
Okay. So here's the story as I've been able to find out. And some of you may know more about it than I do. So feel free to share your insights as I go on. In the early 1980s, this fellow, David Chom, an American, created a cryptographic system called eCash. He had earned a PhD in computer science at UC Berkeley, and he wrote a dissertation titled computer systems established, maintained, and trusted by mutually suspicious groups. And his dissertation is considered the first serious proposal for what is called a blockchain protocol. And after that, others contributed to the technological advances during the 80s and 90s. So this idea of a blockchain protocol is at the heart of cryptocurrencies. And basically, it involves a ledger system. It's kind of complicated, but it's a decentralized ledger system that establishes ownership of Bitcoins and portions thereof. And how does it work? Well, if you fast forward to 2009, there's a still unidentified person or persons who came into the story, and this person or persons took the name of Satoshi Nakamoto, and he created the first cryptocurrency that was called Bitcoin. And here, what he meant by this is he established a peer-to-peer electronic cash system. So there's no intermediaries, such as banks, that track the movement of Bitcoins as they are exchanged for goods and services. There's no intermediary, which is the fundamental role of a commercial bank. No government is aware of these transactions. They're all done without any monitoring. So if you want to hide the origins of transactions, no one can find out who's engaged in the transactions. It's all happening in a cyber world with total autonomy. Well, what are some of the key concepts? Individuals or businesses, they enter the cryptocurrency environment by using their computers to validate and timestamp transactions, adding them to a form of ledger referred to as a blockchain. At the time the cryptocurrency is established, a cap is set on the number of Bitcoins that will be produced or mined. So it establishes a limited supply. So think basic economics. If supply is limited and demand increases, what's going to happen to the value of every Bitcoin? It's going to increase. So early on in this process, verification work performed earned participants ownership of Bitcoins. In other words, your job in earning Bitcoins was to go into this network of computers and verify the transactions that were occurring, just that both parties that got what they exchanged, and that was honestly recorded in this ledger system, and that was all there was to it. There would be no other auditing necessary. And there's a chart here that is kind of hard to follow, but this is on the internet that I picked up, and it's a flow of activity that goes through this ledger system, this blockchain system that verifies transactions from the source to the ultimate end user and back. The key to the system's value is the software, and the software ensures that all transactions are recorded, verified, and then cannot be modified once entered. So no one can go in and after the fact and change any part of that transaction that's been recorded. Thus, once a party spends a quantity of Bitcoin, its account is automatically reduced and the other party's account is increased. And so these transactions are essentially instantaneous. There's no float, there's no time delay, it's instantaneous. The limited supply of Bitcoins in the system means that as the number of participants increase, the exchange value of each Bitcoin also tends to increase. And this is just a chart showing you how this blockchain technology is supposed to work, and its positive characteristics from the designer's standpoint. It's unalterable, copied only. No third-party involvement. The transactions are trusted by everyone. There's reduced costs because there's no intermediary, no government involvement. There's no single point where the system can fail because there's all these other participants in the system keeping track of all these transactions, and there's total transparency. I don't own any Bitcoin. If anyone here in the meeting does, I'd be interested to hear what your experience has been, either investing in or using Bitcoins to make purchases or sales. So with the supply limited and values tending to increase, there's competition in the transaction validation process that resulted in the introduction of more and more powerful computers to run very complex algorithms in an effort to earn even small fractions of the original Bitcoins. This was how you earned Bitcoins. You solve these mathematical problems. And obviously, as time went on, the problems got more and more complex. They needed more and more powerful computers. And so this turned out to be something much different than guys sitting in their basement with a decent PC. So what's happened is this. Today, Iceland is a center of cryptocurrency mining. And one of the reasons is because the computers now to do solving these algorithms and these mathematical problems have to be so powerful, they use an enormous amount of electricity. And Iceland was chosen because it has geothermal power. And so the low cost of electricity permitted Iceland to become a place where these companies set up. This just gives you an idea. This is a facility near the capital of Iceland, Reykjavik, and the airport. It houses tens of thousands of computers performing the calculations required to verify cryptocurrency transactions so they can be added to the public record. And this is now one of the major concerns about Bitcoin and this whole process, that how much electricity has to be used in order to continue to do this. So this is just one of many facilities that have been established. They consume in Iceland more electricity than all of Iceland's residential properties combined. And the electric bills for these companies that are doing this run as high as $1 million a month. So you can imagine, if you're willing to spend $1 million a month on electricity, and the cost of building these facilities, what the potential profit has been as the Bitcoins are mined and divided into smaller and smaller portions of the Bitcoins. Now, excuse me just a second. Now, this whole idea was detailed in a paper titled Bitcoin, a Peer-to-Peer Electronic Cash System. It was authored by this alleged person, Nakamoto, and it was uploaded to a cryptography mailing list so that the first Bitcoin came into existence on the 3rd of January, 2009. And one of the first companies that was willing to accept Bitcoin in transaction was a small pizza shop. And they took a gamble. I don't know where they are today with their Bitcoin business, but slowly at first, participants got involved in producing or mining the Bitcoins. It's estimated that Nakamoto mined at least 1 million Bitcoins before disappearing from involvement. So that person or persons got out of it, obviously made an enormous amount of money as a result of mining the first 1 million Bitcoins, but still unidentified. Now, there's been a lot of concern about it because there was one incident where the system was hacked. During 2010, users were able to bypass Bitcoin supply restrictions, and they created 184 billion new Bitcoins. So what happened? Transactions were not properly verified before they were added to the blockchain ledger. Don't ask me, how that got through, but it did. However, within just a few hours, the problem was recognized and the new Bitcoins were deleted from the system. So after that, it's been pretty solid. So far, this is the only known serious breach of the system. Now, there's now a nonprofit group that's been formed. It's called the Electronic Frontier Foundation, established in 2011. And they began accepting Bitcoins for a time. Then legal issues caused the foundation to cease acceptance after just several months, but they finally did resume again in May of 2013. So there's monitoring of the system that's going on, trying to keep it from destroying itself, trying to keep corruption out of it and hacking out of it. Now there's a Bitcoin Foundation that was established in September 2012 that is working to provide both standardization and oversight to the whole system. So with this, that raised the confidence level, and a lot more merchants began to accept Bitcoin as payment. If just like the monetary system I outlined earlier, if you have thousands and thousands of merchants who are using the same form of money, and they'll all accept that money in exchange for their goods or services, then that form of money is going to be used exponentially. And that's what's happening right now in Bitcoin. Here's a chart that shows what's happened to the price from early 2017. It had a spike, came down again, and now it's at, pretty much at record levels. However, I don't have the current number on this, and as I mentioned to Ibrahima before we started tonight, with Tesla no longer accepting Bitcoin in payment for Teslas, and the fact that Musk sold all of his Bitcoin, the price may have gone down considerably, but I didn't check to see. Marty, you have your hand up. Maybe you know the answer.
Yeah, I have some relatively updated information. It got as high as close to $65,000 during March or April, and because of the recent events with Elon Musk, it went down to the low 40s. I think it's now about 45,000. So it's still quite a bit higher than it was in January of this year, but it's down quite a bit from its high from just a month or so ago.
So there's a major player who was totally committed to it and decided, my understanding is because of the enormous environmental costs of producing the Bitcoin and the electricity absorbed, that was his main reason for getting out. Now, it's difficult for many of us, I think, to grasp this whole phenomenon. Certainly a good deal of the investment in Bitcoin is stimulated by the opportunity for speculative gains from a non-tangible asset with a limited digital supply. So the following excerpt from a February 2021 article that was published on statistic.com provides some insight into the difficulty of understanding the Bitcoin market. And this article expressed, here we go, says, in May of 2020, Bitcoin experienced a so-called halving for the first time in almost 4 years. The halving cuts the reward Bitcoin miners receive for their transaction in half, making it double hard to produce Bitcoin. A Bitcoin halving is triggered after an increment of 210,000 Bitcoin have been mined, the total number of Bitcoin is capped at 21 million, and the halving was Bitcoin's 88th, leaving 12 halvings until the supply of Bitcoin is depleted for good. So if you want to play in that game, good luck. I'm much more risk averse than I'd be willing to take a chance in this scheme. In the meantime, major concerns have developed over the amount of power that's required to run these computers. And this has resulted in the development of new forms of cryptocurrencies where each account controls its own transactions and no verifications by others are required. So already there's an attempt to introduce competing cryptocurrency systems that would be much less expensive to operate. This is a chart from a recent study by Cambridge Center for Alternative Finance that calculated the production of Bitcoin. And it says that it uses more energy than the entire country of Argentina. So, you know, various countries along this graph here, you know, are showing that, you know, Bitcoin, if it operated in their countries, how in the heck would they produce the electricity for every other activity? They just don't have that capacity. So it's another weakness in the system. Mining requires special computer equipment that can handle the intense processing power needed today. The Cambridge study indicated, on the other hand, that the energy wasted by plug-in but inactive home devices in the United States alone could power Bitcoin mining for nearly 2 years. So, for example, we go to bed at night, we turn off our television, but we don't disconnect from the cables system. So that light is going on all night long, absorbing a small amount of electricity in 120 million households. And there are all sorts of other electronic devices that we leave on so that we don't have to reboot them every day. And what basically this study was saying, no, well, Bitcoin does use a lot of electricity, but guys, there are a lot of other ways that we're wasting a lot of electricity as well. Now, an additional environmental issue is associated with China's Bitcoin mining because 2/3 of China's electricity still comes from coal. So there you have a double whammy in that it takes a lot of electricity to mine the Bitcoin, and it takes a lot of mining of coal to produce the electricity to do it. One of the principal players involved in this whole system is this young fellow. And he is a computer scientist. His name is Vitalik Buterin. He's working with a team to change the system so that miners enter into a pool and are randomly selected to complete the transaction and receive a form of Bitcoin in return. And he argues that this system would significantly reduce the consumption of electricity. So by lottery, you would get chosen to complete the transaction instead of having to compete with others for that privilege. The mainstream financial sector is also very much involved in all this, and they're gradually entering the cryptocurrency environment. So in 2019, JP Morgan introduced its own new digital coin. Each of these digital coins represented $1 US held in an account at the bank. When one bank customer sends money to another over the blockchain, JP Morgan's coins are transferred and instantaneously redeemed for the equivalent amount in US dollars. And that's just one. Other banks are introducing very similar services. So to give you a little background on Elon Musk, here's when he started. In February, he revealed in an SEC filing that the company had bought $1.5 billion worth of Bitcoin. With this acquisition, the market price of a Bitcoin jumped up to $44,000. the total outstanding Bitcoin value then exceeded 800 billion. So it raises the question, will this be the latest form of asset to experience periodic cyclical crashes, or have the creators of this cryptocurrency figured it out to say prevent the kind of events as asset bubbles from occurring? And as we just talked about a few minutes ago, the price went down, but is back really still pretty high. So I don't know what to expect going forward, but hopefully there will be adequate protections and regulations imposed on this system, even though its primary reason was to escape oversight and regulation. Now, one government has stepped into this whole arena, and that's India. Legislation is now being drafted there that would ban the trade and possession of cryptocurrencies altogether. As of April, there were about 8 million Indian investors holding an estimated $1.4 billion in crypto assets. The legislation would give holders about 6 months to liquidate their cryptocurrency holdings before penalties would be imposed. So if that law goes through in India and other countries follow through, you can imagine what the value of Bitcoins is going to be. It's going to drop considerably. And that's all I have for you on cryptocurrencies. I'm still learning every day, and it seems as though it's a moving target. There's a new article, a new piece of news about the systems on a regular basis. And I can only say that if you are of the gambling instinct, maybe you want to put a small amount of investment in Bitcoin, but you're only going to get for a fairly sizable amount of money, a very, very small piece of Bitcoin at this point. So I'll end there and open it up for some discussion. And if we run out of cryptocurrency questions, we can talk about anything you'd like.
So Ed, one thing I might mention is just recently the value of all the cryptocurrencies, and there are literally thousands of them now. That Vitaly gentleman you mentioned, I think originally from Russia, but I'm not certain.
Yeah,
he's one of the founders of the Ethereum coin, which is the second most valuable cryptocurrency in terms of total float. I think you mentioned that the Bitcoin was about worth about 800 billion. I think when at its high, it was up actually over $1 trillion, and worth more than all of JP Morgan. And Ethereum at its high got to be worth about 500 billion. So the total for all of the cryptocurrencies, based on an article I just read over the weekend, at one point had gotten as high as 2.5 trillion, but during the crunch during the last 2 or 3 days, it dropped by roughly 20% down to about 2 trillion. So that's about the size of Apple, if you want to compare it to, you know, a well-known
but it seems as though based
commodity.
on what you just said, that the genie is out of the bottle, and getting it back in the bottle is going to be near impossible. It'll be interesting to watch what happens in India and see what kind of success they have and what impact that has on the cryptocurrency markets. And whether any of the other countries decide to follow suit to gain, control, which I think is the main fear of governments, losing control of the monetary systems.
And when I filled out my taxes recently, one of the questions I used some computer software to do my taxes was, do you hold any cryptocurrencies? So the US government is now starting to track that. And in the same way that you can buy and sell stocks, you can buy and sell cryptocurrencies. So they want their piece of the action, so to speak.
I wonder how many people honestly answered that question.
Well, that's a good question.
Anyone else have anyone here have done any investing in cryptocurrency, and you're willing to share your experience?
Ed, did you see Elon Musk on Saturday Night Live?
No, I missed it.
He called it a hustle. And I guess that his cryptocurrency tanked right after that. And a lot of people are angry at him for doing that.
I imagine so. I mean,
It's
but
kinda
but
fun.
in
I have the clip actually. I don't know if I could play it, but it's a few minutes. But it's kind of funny. But they do get him to admit that it's a hustle. I don't know if it's a joke or not, but he does admit it. So,
well, it's his view that it's a hustle.
Yeah.
But again, when you have financial institutions like J.P. Morgan
Yeah.
and other banks involved, they're trying to come up with a way to carve out, a business relationship, a peer-to-peer business relationship that reduce the cost of transactions. And I think that's a reasonable business, approach. But the real issue is doing what's required to keep people from being able to hide their financial activity. It's kind of dealing with the putting money offshore at the Cayman Islands or wherever, and organized crime can and probably has considerably taken advantage of the cryptocurrency system in order to transfer huge amounts of money without the potential for Interpol or the FBI or other police agencies being able to catch them.
Musk invented his own coin called Dogecoin, DOGE, dog coin or something like that. So
No, he didn't invent it. But he was supporting it for a while, and then when his on the Saturday Night Live clip, if you saw it, his mom said, "Oh, I'm glad you're going to give me a Mother's Day gift, but make sure it's not one of those Doge coins." Exactly, and that's what caused it to drop about 20% overnight.
Oh.
So that was interesting. But no, his company Tesla invested, I think you said, Ed, $1.5 billion.
Billion and a half, yeah.
In Bitcoin, and at one point he was accepting Bitcoin to pay for a Tesla car that you could buy, but just as of Friday or over the weekend, he said no because of the fact that it's causing so much of an environmental issue. He feels like that's no longer going to be accepted, and that's part of why I think the Bitcoin dropped so precipitously.
Yeah, it just gives you a sense of how fast this story has moved. I mean, I updated my PowerPoint last week and it was already out of date. So good. There's some really great ideas that have been put on the table. The challenge is to figure out a system that serves everyone without victimizing anyone. And that's, I think, one of the challenges with cryptocurrency. How do you serve everyone without victimizing anyone? And the monetary systems from day one have had their beneficiaries and their victims. And the power of the state to declare a particular paper currency or coinage or tangible good, whatever, as legal tender is an extraordinary power in the monetary system. So if cryptocurrencies are adopted as legal tender for paying your taxes and for purchasing public goods and services, that's going to be a game changer. Then there's the India story that the people in India, the government in India, is obviously looking at this as an extraordinary threat rather than any kind of an opportunity.
And India just went through something a few years ago that you might remember, Ed, where they changed out all their currency. And part of what they were doing was trying to get better control over all the illegal transactions that were going on that were not being reported to the government. So I think they said everything bigger than 100, I don't remember what the name of their currency is, a certain note would no longer be valid after a certain date. And people had to bring wheelbarrows full of currency to the banks to trade them in for the new currency. And of course, they were able to track how many of these bills each person was trading in. So, and yeah, that was kind of an interesting undertaking. So there was something else I was going to say, but I've forgotten it. So if I think of it again, I'll let you know.
Jump in. Yeah.
I find it hard to believe that you could put anything on the internet that would be totally private. Somebody somewhere has to be able to detect it or decipher it. Could it be
yeah.
could it be a myth that it's totally decentralized and totally undetectable?
I don't think it's a myth in its original construction. It's just an extraordinary complex accounting system that has no central accountant. And again, this young Russian fellow that was mentioned, you know, he's trying to duplicate the system, I gather, but dramatically reducing the amount of computation that's required and the competition to do these computations on supercomputers by basically awarding the responsibility for transaction verification by some sort of random method. We just have to follow that story, you know, on a daily basis to see, you know, if he's successful. And probably success would mean, since I don't think, my own view right now is that governments are going to be very reluctant to sanction any of these systems yet, would be if there's some sort of a private, you know, members only system that adopts the you know, the alternative to Bitcoin that he's come up with. Whereas Marty mentioned, there are literally thousands of these competing systems now. And are they all designed under the same basic premise and principles? I don't know. But it scares me a bit.
Yeah, me too. Yeah. I would only trust an electronic currency issued by the Treasury Department.
I don't know. They're printing a lot of money that doesn't have anything backing it. I think that's one of Ed's points right now. So
electronic greenbacks, I mean, not Federal Reserve notes. There is a Treasury Direct website, but in the U.S. notes bills, you can buy them direct from the Treasury, but they're not legal tender. So
yeah, that's been the challenge ever since the greenbacks were taken out of circulation. I think last week somebody mentioned the last ones were finally recalled in the early 1960s.
Yeah.
But I mean, the idea behind the greenback, the promise was to the you know, Americans at the time was, all right, we don't have enough precious metals to back our currency, but after the war, we'll make it possible for you to redeem the greenbacks in gold or silver certificates. And so people trusted Lincoln enough that they accepted the greenbacks at pretty much par value against currency that was in fact fully redeemable at the time.
Greenbacks essentially were like labor credits, because it was Congress issuing money to pay somebody to do something, either to fight a war or to be a medical or to provide services or something. The idea was that it's not coming into being by bank credit.
Yes. Well, I think a step, I mean, certainly moving from the current system we have now, which allows the Federal Reserve System, which is owned by the commercial banks, to issue debt money, replacing that with the issuance of government money spent directly into the economy without any debt, would certainly make sense to me.
Yeah.
It didn't make any sense to J.P. Morgan back at the turn of the 19th to 20th century. And so he made sure that the system that they came up with was the system that we had that we came up that became the Federal Reserve System.
Yeah.
The worst, the thing that scared the bankers most was the possibility of a national banking system and government money.
And I think George said that too. Didn't he say that money was essentially a labor credit? Or maybe you even said it last week. I don't remember, but where I heard that.
Well, George's argument was that government should issue the money, and because government issues the money and it's legal tender, that there's no necessity for it being backed by anything tangible.
Right.
So, you know, he didn't have the same concern I have about the global commerce, and the ideal being having one form of currency that could be utilized everywhere. But again, you have the euro has demonstrated that unless you have the economies unified from a standpoint of their tax system, their fiscal system, that the euro has negative consequences on those countries that have the weakest economies. So that's why I say we need to have some sort of a international treaty negotiated. And in my view, the BRIC standard would help a country. Germany may not need it, but Greece does. Portugal does. The strongest countries in the European Union don't necessarily need it, but the other countries could adopt the BRIC standard and use it effectively because everyone would be participating. Greece may not have the capacity to participate in the precious metals backed deposit banks, but over time they might be able to do that as well. So I think it's my view is that would be a good hybrid dual system, and it would give the countries with the weaker economies a chance to have a stable currency, a currency with stable purchasing power, and they would be able to participate in the international markets on a more equal basis.
Ed, I remembered one of the things I wanted to share, which was that some of the biggest online tools for transferring money, like PayPal and Venmo, which is also owned by PayPal, are now accepting certain cryptocurrencies for handling their transactions. You can either buy or sell 3 or 4 of the top cryptocurrencies using those platforms. So, and I think they have a lower overhead charge than some of the crypto exchanges. I think one of the ones that just recently went public was called Coinbase, if I remember correctly. And they had an IPO, and the stock, I think, originally was valued at 250, but the first day it got as high as the low 400s, and now it's slowly fallen back down, and it's just about 250 now. So.
Yeah, well, that's the other, dynamic of all this, and that is that the stock market is also, in my view, become nothing more than a huge gambling casino. I don't know, there used to be this thought that the value of a share of stock had something to do with the revenue stream capitalized, by the market. But, there's so much liquidity in the world, and how, very, very wealthy individuals and even businesses that have an excess amount of cash, they're all, throwing it into the equities market, particularly now because the returns on bonds are so low, the returns on government securities are so low. I mean, you still want to hold some of that because of its secure nature, but all of this excess cash is thrown into the stock market, and it's seems to me it's turned the stock market into a real gambling casino that's going to have another asset bust sometime soon. Whether or not it will coincide with the forecasted downturn in the property markets around 2026 or sooner, I don't know. This is one of those, some think tank with a good, computer analysis of all of the markets might have a good, better handle on this. We have within the community, the Henry George community, there's an Australian named Phil Anderson. I've interviewed him on the school's Smart Talk program, but he's an investment analyst, and he's done a really remarkable job at looking at the global investment community of all investments, not just the property markets, but stock markets, commodities markets, and looked at them from a standpoint of how they've coincided with the booms and busts in the global economy. And so he has, I don't know how many subscribers to his investment advisory service, but quite a few who follow his basic market timing analysis. And basically what Phil says, that there's a 200-year history to show when the stars align, the markets will rise and fall regularly. And even with all the chaos that's going on in the global economy now, he's still very much certain that, and advises his subscribers that here's where we are on the time horizon. Here's what's going to happen next and how soon. And if you believe in the system, you're in and out of the different markets based on where they are in this historical analysis. I told him, even if you could really make me wealthy by following your ideas, the problem is I think I have to devote my whole life to watching the markets every day to make decisions on when I should be in and out of what markets and how to invest. I'm too lazy for that.
And it's Keith Mundy here.
Yeah, Keith.
I'm a subscriber of Phil. I've known him for many years. He has really got it down. He's really got his finger on the pulse.
Yeah.
And it's not I don't think it's a matter of watching the markets each day. Phil gives a long-term view. And I'm absolutely convinced we're at the start of a massive asset and property run-up, which is going to end in about 2026. Could be a year or two either side, but around 2026. And then we're going to see the mother of all crashes.
Yeah, I follow what Phil produces, and he has been proven right over the last a couple business cycles. His book, The Secret Life of Real Estate, is a book that anyone who has an investment portfolio should consider buying and studying. And Keith is telling us that that Phil's work has helped him stay out of trouble in the investment markets, right, Keith?
That is correct, yes.
Anything else about tonight's discussion? Anything more on the cryptocurrency phenomenon? Well, okay. Next week, Joe, I see your hand up, or are you just clapping?
No, I am clapping too. I really enjoy your presentation. I just wanted to mention that Michael Kubhoff, who's known for his reintroducing the Chicago plan a few years ago, he sort of did the documentation to show that 100% money would be a more productive and more beneficial to the economy. But he said, there's so many changes that would have to be made. But he added that the CBDCs are the kind of little cousin of the Chicago plan, and that they would just switching to CBDC would
Would you tell everyone what that is?
I'm sorry, central bank digital currency.
Mhm.
And he said that would, accomplish 80% of what the Chicago plan wanted to do. And it would be a great step forward in monetary reform. And it might be spurred on by these cryptocurrencies that the central bank, in order to keep control of the system, which I think is absolutely essential, are looking very hard at the CBDCs. And I think China's already kind of the first in line, but the other great nations are looking at it as well.
Yeah, there is a shift in power. The United States no longer has, the ability to call the shots in the global economy, and it's competing very much with the Chinese. This idea of having currency directly issued into the economy, but having an expiration date on the currency, I guess that goes back to Irving Fisher and the Depression era in the United States, where cities like Chicago were authorized, were given the ability to issue their own script, and the script had to be spent by a certain period of time or its value would disappear. And so that certainly removes the benefits of hoarding the currency over time. As it turned out, the United States, the Supreme Court intervened and said that system was unconstitutional. So there's still room out there, I guess, for all of this in discussion as to what sort of reforms in the monetary structure and in the currency system would have the most beneficial impact. I just think about the senior citizens in many countries who live on retirement income and basically have, to a large extent, lived on interest income generated from government securities. So if we eliminate government debt, they would have to invest in corporate bonds or put more money into the stock market. So what would the ramifications be of that? Right now, with interest rates so low, central bank interest rates so low, you think about the reduction in household income that's occurred with households that have had a significant portion of their assets invested in government securities. I don't know if that's the same in Canada or Australia, but the numbers are pretty significant in terms of how the reduction in interest rates have benefited debtors at the expense of creditors, of savers. Well, I think I'll end the evening with that. We are going to meet next week. If you have any ideas for discussion, you might want to send me an email or send Ibrahima an email to put on the table, and we'll try to have an open discussion of everything that we've talked about in the course so far. And from a historical perspective, or anything you think we should have discussed that I failed to discuss. As I said, this course was a brief history of money, banking, and credit. There's still a lot more that could be discussed, and we could have an actual semester long or even a year long course on the subject. So I thank you for your participation, everyone. And hopefully you'll come back for one more time, and we'll have a nice, robust exchange. And perhaps some of the folks who've been so quiet all course, but have stuck with us, will jump in on this discussion and join us for something and make your own contribution, ask your own questions. So thanks again to everybody.
Thanks,
Thank you, Ed.
Thank you,
And let me add that on Wednesday, we will be meeting again for another part of our Money Talk series with Joe Bongiovanni from the American Monetary Institute. And he will be talking about the work of Frederick Soddy. I guess if you are not familiar with him, I think he was the only one who won 3 Nobel Prizes. Maybe if there is another one, it should be Linus Pauling from Oregon University. So he's a great guy. He has some interesting ideas. So I really wish you can all make it on Wednesday. And I think Joe mentioned Kumov. We are trying to get Kumov to come and talk to us about the Chicago plan. So look forward to that.
I managed to find Sadi's work, The Role of Money, written in 1934, online.
Okay.
So Ibrahim, I can send you that file if anyone wants to read it ahead of time before Wednesday.
That would be really nice. I could right now upload it on the website so people can have access to it from there.
I'll send it off to you in a few minutes.
Thank you, Ed.
Okay. All right. Good night, everybody.
Good night, all.
Bye-bye.
Bye.